Okay. Now, is that you, Afaf? You are sharing the
Yes,
PowerPoint. Okay, that's fine. I think we can start. Yani, after Bismillah ar-Rahman ar-Rahim, go ahead and start, Afaf.
Bismillah ar-Rahman ar-Rahim. So today our subject is water farming finance. For the outlines, we have what do we mean by finance, the role of financial sector, what are the differences between the financial economy and the real economy. I'm sorry. Okay. How and why the banks originate, fundamental elements in Islamic finance, how to reform the finance sector, main components of Islamic finance inspired reform, what can central bank do, and other necessary reforms. Okay, for the what do we mean by finance? The corporate finance institutions, they define it as the management of money and includes activities such as investing, borrowing, lending, budgeting, saving, and
turn on, please, the slides.
Okay. How can I?
Just by your arrow. By the arrow should turn.
Okay, I turn it.
There must be some arrow either on your. Okay, now it's turning. Okay.
Yes. So the second definition is by Britannica. They define it as the process of raising funds and capital for any kind of expenditure. For the financial institution, is an organization such as a building society, pension funds, or insurance company which invest large amounts of money in financial assets such as loans or other securities, as opposite of to property. For the financial sector is the part of the private sector of the economy, which deals with money, including banks, building societies, and pension funds. So now, what is financing? Financing is the process of providing funds for business activities, making purchases or investing. Financial institutions such as banks are in the business of providing capital to business, consumers, and investors to help them achieve their goals.
Okay. Go ahead, continue, please. And we want to make a discussion here.
Okay. So after the financial intermediary.
No, go ahead to the financial intermediation.
Okay, for the financial intermediation are the institutions or individuals that serves as a middleman among diverse parties in order to facilitate financial transactions. Common types include commercial banks, investment banks, stock brokers, and stock exchanges. The types of the financial intermediary institutions are the banks, credit unions, pension funds, insurance companies, and stock exchanges. And now I mentioned some characteristics of financial intermediaries. So the first one is regulation. Regulation is necessary for financial intermediaries because of the complexities of the financial system. Due to weak regulation, financial crisis may happen and may put the economy at risk. The second one is investment advice. Many financial intermediaries help their client in increasing their investments. They assist their client to grow money by making investments. reduction. So compared to other individuals, financial intermediation have greater resources to bear and spread the risk among different individuals because they have expertise and manage different portfolios, and they also employ other financial experts. As they manage the large sizes of the portfolio, it helps in reducing risk through diversification. Scale economies, financial intermediaries are commercial banks, mutual funds, and other financial institutions that help in growth process of the economy. They take deposits from a large number of clients and lend them to multiple borrowers. In this way, they maintain economies of scale. They promote economic growth by encouraging saving and investments. The last one is provide loans. They play an important role in bringing together those investors who have surplus cash wishing to lend them, and those companies who wish to obtain loan facilities. They provide liquidity to the market by providing shares to shareholders and capital to companies.
Okay, now turn on the next slide.
Okay, so
Prof, I
is
have a question.
the role.
I
Yeah,
have a
just
question
one
here.
moment. Yes, we are coming
Okay.
to that. Okay.
And now I have the
Yeah.
role of financial sector.
Yes, yeah. Tell us what is the role of the financial
Okay.
sector.
So
We
the
are
main
coming
role.
to discussion all.
Okay, the main role of financial system is to bring together economic agents with surplus financial resources, such as households and those with net financial needs, such as companies and governments. The parties can be brought together directly or indirectly. In the first case, known as direct finance, the parties with excess financial resources directly finance those with financial needs.
Okay, so now let's start with your question, Sami.
Afaf said that financial intermediaries encourage saving and investments.
Yeah.
Yes.
Yes.
How it encourage saving?
Okay,
Other than
okay, fine. We will discuss this. This is what I want to deal with at this moment. So one thing, notice that we have gotten several definitions of financing, of financial intermediation, and of financial institutions. Now, is every financial, let's start with intermediation. Uh, Financial intermediation in this definition that is given by Afaf now is really expanded to cover also brokerage, what is called in Arabic samsara. So we want to make a clear distinction first between intermediation and samsara or brokerage. Brokerage or middleman, having a middleman only reconciles the opinions of the two parties and they meet together without him. All the middleman does is to bring their views closer one to the other. Whereas intermediation, you take a lot further action. In commercial intermediation, the merchants buy goods from Sham, for instance, and then go and sell them in Mecca in رحلة الصيف, or in رحلة الصيف, and in رحلة الشتاء they go and sell goods that they brought some from Sham to take them to Yemen. But these are taking action on their own. They buy the goods that they think can be sold in Mecca or in Yemen. And again, from Yemen, they buy goods that they think they can be sold in Mecca or in Sham. This is a commercial intermediation, not middlemen, not samsara. This is a function of merchants, and it is the full sense. What does trade do anyway? What is trade other than commercial intermediation? That is taking goods, buying goods that they think are good for customers and take them to the customers, buy from the factory, maybe transport it to a small city and sell them there if the merchant is from that small city. So intermediation need to be distinctive from brokerage or middle person. Middlemen don't take responsibility on their own. They only reconcile the views of the others, whereas merchant take responsibility in buying goods with their own money and then selling goods and cashing the money to their own. This is a big difference. The banks, as distinct from brokers, banks take loans. Talking about definitely conventional banks, they take loans, they become owner of these funds, and they give financing to the others, and they become owners of the debts on these loans that they give to others. So they act exactly like merchant, not like middleman. Now, it is okay to understand that it is true. Yes, middlemen and brokers make some functions that is kind of quasi-intermediation, but that's a different kind of function. Okay, so when we talk about financial intermediation, usually we mean by it those institutions that take responsibility of their own. That will exclude then all brokers, that will exclude also insurance companies, although insurance companies, they take premiums from people, they earn these premiums. And because a lot of money is accumulated with them, they make investments, especially when we talk about life insurance, that they collect money for longer term, and then they will be required to pay it sometime in the future, or pay part of it or big part of it sometime in the future when the death happens. Then this accumulation make them able to make lots of investments. Now this is really not intermediation, because they take these monies as price of the risk that they also take from the subscribers with them. So this is a kind, we need really to think clearly and look then at banks as financial intermediaries in the full meaning of the word. Banks take funds from the units of surplus and distribute them to the units of deficit. They take that on their own, on their responsibility. They take this action. This is the financial intermediation that we want to talk about, not really the insurance companies or the brokers. Okay, now, in a sense, those insurance companies and brokers are also kind of the financial intermediaries or financial institutions, but that's not really the intermediation. That when we say simply intermediation, we mean only taking financial intermediation, of course, taking surplus from the surplus units and giving them to the deficit units, not insurance companies, not pension funds who accumulate a lot of money and they take by law or by agreements, they take a lot of funds weekly or monthly or whatever from the subscribers, and they have to invest this fund instead of making them idle. These are not financial intermediaries. Now, they are financial institutions, yes, because all they deal is with money, taking money, investing money, and pay money. In that sense, yes, they are financial institutions, but they are not financial intermediaries in the sense that when we say financial intermediation, we usually mean, I mean by we, all people who deal in finance, whether academicians or practitioners in the market. So we do not include brokers or pension funds or insurance companies. Now, what you mentioned again, Afaf, the building association. Building associations, these are a very small, narrow concept that exists only in the British tradition. Not law, because there are almost no laws, but in the British tradition, older tradition, these building associations are like the kind of associations that 10 people in any office, each one of them put $100 a month in a collective fund, and then each month they give it to one of them. These are the building associations, that kind of thing, that a group of people start saving in order to build for themselves in the future. So they have a sense of financial intermediation, but really it is not at all in any concept that we talk about when we say financial institution. So you took us, Ya Afaf, too far away from the main concept, from the main issue that we should have focused on. It's okay to know these, but it is necessary also to make focus on financial intermediation in the sense of taking the surplus from the surplus unit and giving them to the deficit unit. Does that answer your question, Ya Sami Ghabin?
Yes, yes, and I have another one.
Well, wait a minute before that. Now, these financial institutions that are banks, whether commercial banks or investment banks or special banks like industrial banks or agricultural banks or whatnot, that are specialized in certain sector of the economy, including also the institutions that provide financing to microfinance and so on. So these are financial intermediaries that take the surplus from the surplus unit and give it to the deficit units. Now, what are the functions they do? If we go into these functions that are mentioned by Afaf here, not all of them are done by this. Investment advice is not really a part of that function. It is sometimes they do it, and nowadays they do it more, especially for private banking. In private banking with the high net worth individuals, they make a lot of this kind of financial advice, but that's not part of the function of taking funds from those who have surplus and giving it to those who have deficit. They give loan, they collect deposits and give loans That is their main function. While taking deposit and give loans, definitely they diversify risk. So that's, yes, that's part. They help by selecting to whom they can finance, and they have more ability to reduce risk compared with the individual, when an individual gives finance to another individual. So definitely, because of, and they benefit from the economy of scale. Yes, so not really all these functions that are mentioned are functions of the financial intermediaries. For instance, uh, as one of them, insurance company never give any investment advice. They advise themselves. They don't advise you, and they don't care about you. They take whatever they take from you is a premium that becomes theirs, completely earned by the company. The premium is earned by the company, completely, including the life insurance premium. In the expansion, and as part of the financialization, in the expansion of financial intermediaries, they have, and this is part definitely of the financialization that we need to discuss, where they start, yes, especially to in private banking, give a lot of investment advices and interfere in much more areas than simple financial intermediation. But that was part really of the financialization. Definitely risk reduction, risk diffusion, risk diversification, and scale economies are performed through the financial intermediary, because they take from large number of depositors and give to a large but lesser than the previous one number of deficit units, and through that they are able to reduce risk, definitely, and able also to benefit from the economies of state. So now we want to come back to the main function, the function of financial intermediation. The problem that we are discussing and that we have discussed in our last meeting, in fact, is the problem of that expansion of financial intermediaries that have become dominating in the economy, and that have become, and we've seen that a larger part of the profit of the non-financial companies have become derived from financial activities of these non-financial companies. This is one of the features of financialization. So the issue here is those problems that we discussed in our previous meeting are the real issue, and what is the way of avoiding them, not what is the way of redefining financial institutions according to financialization. Now, some of these definitions that you gave us, really, Afaf, are financialization definitions, not definitions of financial institutions as they were and as they should be in providing finance to the real economy. Of course, the original function of it is finance, providing finance to the real economy. Go ahead, Sami, and what is your other question? And anybody else, if you have any question.
Financial intermediary like banks use their customer deposits, right?
Yes.
So we can't call it that use their own money. It's not the bank's money. It's their clients' money. It's true.
I think here you are making a serious mistake.
Okay.
Okay. including the regulations in all up to today, all regulations of the banking sector still maintain that the deposits are given on loan basis, and financing is given also on loan basis, and loan transfers the real ownership.
Yes,
So the
yes.
ownership is really belongs to the bank of the cash they have received, and they become under debt. And a debt is different from cash, definitely. A debt is only an interpersonal relation that is a legal relation between the bank and the depositor, not really that the money that is in the disposition, under the disposition of the bank, is owned by those by the depositors. It is not owned by the depositors. And this is where the regulations came after the Second World War, especially in all countries, that in order to avoid the harshness of the bank bankruptcy, or the harshness on the economy of bank misbehavior, they started regulating it and telling them you have to maintain more reserves, you have to maintain more prudence, apply more prudence rules in order to be able to pay back these deposits. Not that you don't own what you got. You own what you got, and you are under debt to these depositors.
Thank you, bro. Yes. Thank
Any
you.
other question? Now, we still have somebody who did not join us. I don't know who are they. Who did not join us yet? Okay. Jihun is with us. That's
I'm
fine.
back.
Huh?
I just wanted to say that I'm back, alhamdulillah. So
Yeah, you are
I'm
good,
into
Jihun, mashallah. Okay. Abdel Nasser didn't join us yet. Yeah,
The Nasir
only
is here, bro.
I'm already joining.
Abdel Nasser, you are with us?
Yes, bro. I'm with
It
you.
doesn't show here. Okay. Okay. Well,
Yeah,
Abdel Nasser, I
joined.
only have one email for you, which is the university email. And I definitely prefer that you join through the university email. And also,
Yeah.
please, when the curfew is out on Monday, please come to my office between 11 and 4.
On coming Monday.
Yes.
Thank you. I already sent an email to you.
Okay, well, fine.
Thank
I
you.
need more than email.
Sure. Thank you.
Now, Afaf, continue. You want to tell us about the development of banks again? يعني, I don't know. يعني, this is the mentality that you are quoting. It's not your mistake. It's the mistake of your resources. Yeah, Afaf, that the Europe is the whole world, and anything that happens in the world only comes from Europe, and always its origin is Europe. They deny any effect from outside Europe. And this is where, how banks came, that somebody in the Roman Empire gave loans. Gosh, well, in the Islamic history, there is a lot of those people who gave loans, and definitely collecting funds on mudaraba or on loan basis is a practice of every society. It from day one, probably the two sons of Adam, one of them gave loans to the other. So this is not an invention, really, a Roman invention that they were giving loans. In fact, and this is a reality, and it is also documented in some of the Western documents, that the concept of sarraf was taken by the Crusaders from the Middle East. Ibn Jubair said that in the Arabic references, and the Sarraf existed in the Middle East, and the Sarraf expanded in the Middle East and was doing the three functions of holding deposits, of managing checks and current accounts, and also of transfer funds from one city or one country to another. And these functions were taken by the Europeans. If there was a Roman priest who gave some loans, that doesn't mean the source of banking comes from from the Romans. The source of banking really came from the concept of sarraf, and it was a development of the concept of sarraf into a bad way. Not in now you may ask that question, why the sarraf in the Middle East did not develop into a bank, whereas the sarraf in London developed into a bank. The sarraf in London betrayed the depositors and started making money from their back, lending their money, because the money was put with the sarraf on wadi'a basis, and he had no right to use it. But he noticed that a lot of money is collected and not all of it is being demanded at the same time. So he could, from behind their back, abuse that contract and start giving loans. And loans were given only to the oppressors, to the lords, and to the oppressing governments, to the feudalist rulers. Loan was not given really to any normal person. So these sarraf betrayed their depositors. Instead of keeping it as safe money, they changed it into started giving loans from it, and that's what created the issue of really an unfairness of the banking system. Probably that curse of that betrayal remained with the banking system until today, because the Western banking system is a major contributor to all crises that happened throughout the recent, 200 years economy. The banks were a major contributor to the crisis. Okay, so this origin of bank that, it came from a Roman priest, I think this is incorrect. We need really to not to get these references like Bibles. They tell the truth. They don't really tell the truth, like the Bible of today that has mixed up many of the real truth with many of their own ideas. So I wouldn't accept this kind of origin of banks in the Roman time from the priests of the Roman. Yes, whoever raises his hand, go ahead. What is your question?
Okay, Assalamu alaikum, Professor. I think the reason why the Muslim Sarraf did not develop banking is they had the idea of 100% reserves requirement, and they had the idea that they were only the safekeepers. So that's why they couldn't lend the money of the depositors.
That's correct, yes, but now you want to call it 100% reserve requirements. It's not really. You look at it from the real point of view, the reality, the fact on the ground that these were deposits. That is wadi'a in the Arabic fiqh. And wadi'a means safe deposit, does not mean loan. And does not transfer ownership, so does not give right to use the money. But if you take the concept, take it back to Az-Zubair ibn al-Awwam. Az-Zubair ibn al-Awwam used to refuse accepting wadi'a on that same point exactly. He used to tell people who want to put a wadi'a with him, give it to me as a loan. that will make it better for you and better for me. Better for you because it will be then guaranteed by me. It's a debt on me. I am required to pay it to you back, regardless of what may happen to the cash that you gave me. If it is stolen, now in the concept of the sarraf, yes, if the money is stolen, the losers are the owners of the money because it is wadi'a, not because 100% reserves, because it is wadi'a. And wadi'a means only safekeeping with no right to use that fund. Whereas Zubair wanted to take the right, it's better also for him because he can use that money any way he likes. And he used it and made a huge wealth out of in his business that is known, and it is mentioned in al-Bukhari. And it is mentioned in al-Bukhari again why he used to not accept taking the money as wadi'a, but taking it as a loan. Okay, so it is, yes, in a sense, you may call it. Well, you find a precedent then for Hussein Askari for the 100% reserves. Yeah, we must want the Sarraf to be only a wadi'a holder.
Mhm.
You can interpret it that way, and that gives you an edge.
Dalil.
All the fuqaha will support you.
I see.
Okay.
Professor, I have a follow-up question.
Yes.
So when somebody gives a debt and we use it for investment, so the money is stuck now with the investment, and if the creditor comes and asks for his money and you have invested that money with somebody, how would you pay him back?
Well, that's exactly the problem, because in Sharia, the loan is due any time. In other words, can be asked for any time. And then you really cannot use it for these kind of things. You have to be always able to give the loan back to the owner. So probably you can't use it in investment. Now, the exception, which is a very reasonable exception also that is mentioned in the Maliki school, if it is known or understood between the two parties that you are giving me the loan to use it for a thing that cannot be mature before an adequate period of time, and whatever that you promised me as a period of time, then for the loan becomes binding on you. In other words, you cannot ask for it before the maturity of that period. This opinion looks very, very reasonable. And I would say whether this is explicit or implicit in the understanding. So you cannot really then ask for the loan to be paid back at any time. You have to wait until the promised maturity. This is when you deal with loans. Now, when you deal with mudaraba, the issue is quite different. I mean, absolutely different, because in mudaraba, the time is less important. The time is useful, yes, but less important than that is the maturity, I mean, by the time. Less important than the objective itself. So when you give me your money on mudaraba basis to invest, for instance, in real estate, you may have given me the money only for 1 year. But if I couldn't liquidate within that 1 year, at the end of the year, you cannot tell me, oh, you have to liquidate and give it to me now. I'll tell you, okay, you either take the property that you own which is your property because that's your money that I used as a wakil, or you liquidate it at your own cost. If that liquidation will cause losses, then you will be the loser. It is your choice. So here, the maturity is much less important than the cause of the use of that funds in mudaraba. And so you may and it becomes the money provider choice whether you accept, you prefer maturity and you even at a loss, or you wait until normal liquidation may be done of the asset. That depends on the kind of investment that we agree on. And in mudaraba, definitely as Rabbul Mal, you have a choice to tell me what kind of investment you want. And that choice is done either explicitly or implicitly. In other words, investment deposits in mudarab in Islamic banks, although they are for a given period of time, that is 3 months, 6 months, whatever, the bank will not be under financial pressure to make liquidation at the maturity, unless with the approval of the fund provider if it were to be at loss. So I can tell you as a banker, well, we cannot pay you now, but give me more time to liquidate normally, or otherwise you will have to bear the loss that may happen in Islamic banks. You see, this is one of the advantages really of the Islamic bank, whereas the conventional bank is bound to that maturity, and the bank will lose, not the depositor. Depositor has to get its money back along with the interest, and the bank is the one that loses. And of course, when at the time of bankruptcy, the issue becomes different. Okay. Any
Okay.
other question? Okay, so go ahead then, Afaf, and tell us what is the next. Leave this issue of, jump over it. The bank origin, where did they come from? They came from the concept of sarraf that was borrowed from the Middle Eastern cities in Beirut, Damascus, Halab, Baghdad, and Haifa, and the other cities, Haifa and Akka. Okay. Okay, now we want to talk. Why do we need to talk about Islamic finance here? Because we want to derive from the principles of Islamic finance, we want to derive the repairs or amendments or reforms or changes that are needed in the system now to be able to make it compliant with Sharia. And this is again partially relates to you, Mirza Abdul Mateen. Yeah, Mirza Abdul Mateen, notice please that what we are talking about is a different paradigm, not accepting the paradigm of financialization of financial intermediaries. We want the financial intermediaries to go back to their original function, not to be playing, for instance, trading foreign currencies and trading debts and trading other financial institutions. That's not their job. Their job is to support the real economy, to support the production of food and other items that serve a human being. And personally, I have a hunch. I don't have any proof of it, but a hunch. Definitely, the expansion of the financialization is one of the major causes of poverty in the world, and inability to satisfy all mouths that are open for food. We are not producing food because we are using our resources in financialization, in deriving profit from purely financial activities, instead of deriving profit from supporting the real economy in planting more land for agriculture and in producing more clothes and other needs for human beings. And in my opinion, without having any proof of it, probably this is a major reason why there is poverty in the world, and poverty is not really declining. Okay, continue, Afaf.
Okay, for the fundamental elements in Islamic finance, we have five elements. The first one is realism. The principle of realism is well established in Islamic Sharia in general and in Islamic economics and finance specifically. It has several implications, including the following. So the first one is Islamic finance deals with things and issues as they are on the ground in the real life. It means it doesn't accept presumed, imaginary, and untrue matters, assets, transactions, and issues. As debts do not generate utilities and increments, no wealth creation could be attributed to them, and consequently, there should be no reason for making any economic gains from exchanges of debts. The third one is to set the Prophet Muhammad ﷺ, no transaction is tolerated on what doesn't exist in reality or is not owned by the party that makes the deal. So the transaction must be owned by, must be in the reality. The fourth one is finance may be offered in either of the two ways. The first one is on benevolence basis with no return to the finance provider, or on a return basis, where the finance provider must then own wealth-generating assets or goods in order to be entitled to any return. For a finance provider to earn any return, it must be part of the chain of processing factors of production into a productive enterprise, or a thing that can only be done through ownership.
So this is where ownership then is very important in finance, in Islamic finance. No finance can be done without owning, and by owning, you become part of the owners of the factors of production. Based on that, you deserve an increment. Okay, continue, please.
Professor, I want you to shed some more light on this factors of production, because as I mentioned last week also, for consumption goods, it's not part of the production process.
Well, okay, let me start with an example. If I buy wheat from east of Turkey and bring it to the consumers in Istanbul, I buy the wheat, say, for 10 lira a kilo and sell it here for 15 lira a kilo. Is there an added value here that the consumer that I provide, and the consumer pays the fair price of 15 lira per kilo? Is there an added value here? Is there a value creation in this action?
Yes, you
Yes.
are adding
Okay.
a value.
Now, if I cannot pay the $10 there, I cannot pay, I don't have money, and I use a banker with me on ownership basis, that come on, Mr. Banker, and you own this, buy it for 10, and I'll buy it from you for 11 and sell it in Istanbul for 15. Now the total amount of 5 lira here, is it not value added, value creation? 2 lira is taken by the financier and 3 lira is taken by me. Aren't all these together are part of the creation of added value?
Yes.
They are, definitely. Okay, so here is where it is. Now, if I don't have money and it costs then the customer 17 lira instead of 15 lira, because I need to have financing and the financier wants 3 lira and I want also 4 lira to make it up, to make my two ends meet. Is the whole 7 lira consisting of these two sections value added when I sell the item to a customer? It is value added. So the value added here, the financier earns by virtue of owning. And by virtue of owning, the financier becomes part of the process of making this commodity from East Turkey available to the consumers in here in Istanbul. Correct? And they deserve an increment by virtue of owning, because they have become part of the production of the added value by that ownership. And the ownership from the farmer in East Turkey to the bank becomes, I mean, the added value is 3, and the added value, another added value of 4, is from the bank to me.
I see. Okay.
Right?
Okay.
So there is added value here created when we talk about consumer goods. Okay.
Okay, because
Now,
I always thought that value adding means being part of the production, not on the consumption side.
well, I mean, are you a communist, man? Because in communism, they used to say in the past, in the Marxism, that trade does not create added value. Only production creates added value, but not trade, which is incorrect, definitely.
Wrong.
Now here, the production of added value through trade. And this is what any wholesaler and the retailers and all that and finance providers make if they enter the process through ownership. If they don't enter through ownership, they don't become, because if I get a loan, so I become owner of that 10 lira loan, and I go and take it, make whatever profit I may think of selling it only at 13 only, not really at 15, because I mean, this is a loan. This is my money that I'm using, but you force me to pay 2 more lira to the conventional bank here that gave me the loan, and without contributing to the process of creating the added value. The bank does not contribute to the process of added value, and theoretically does not deserve any increment, because and this is our justification that the loan does not deserve any increment, because it's not part of the of any production of added value, whether through commerce, through to consumers, or to producers, or through I mean manufacturing issue. Okay. طيب تفضل. The one who raises his hand, please.
Yeah, Professor, I have a question. That this does this means that more the ownership, the more the number of ownership in any transaction or any commodity till it reaches the final consumer, the more value will be added?
Not necessarily, no, because if you have parasitic the intermediaries that really do not help in it, but parasitic, like for instance, you have a lord who sits somewhere, or an army officer and takes also fees to allow you to pass through this road. Like they do now in northern Syria, all these warlords, whether from the government or from both sides, in fact, collect this kind of rent to allow you to pass. Is that an added value? No, that is a stolen value. It is stolen in the final analysis from the consumer anyway, because the consumer has to pay it, but it is really not an added value. If you don't provide a thing that is useful, then definitely it is not added value. But if you provide something that is useful, and financing is useful, okay, then you are part of the added value. But to be really deserving that any addition, you have to go through the proper channel of deserving increment. If you give purely a loan, you are not part of that proper channel that creates increment. Therefore, you do not deserve an increment.
Prof, can I ask a question about this example? About the first example that you said, if
Yes, go ahead.
if I buy a product with 10 lira, and then go to the bank to finance it, and then sell it at 12, if the bank get 2 lira, and me didn't get anything, is this added value or not?
Well, again, it is if I sell it, you mean at 12 and did not make any profit. Yes,
Bank, the
it
bank
is
made two.
added value. Yes, it is added value because the bank was able to make it reach me. Otherwise, it won't reach me. So there is an added value created by owning the commodity and making it reach me.
Okay.
And the bank does that. Yes, it is definitely an added value. Now, I may not be able to sell it at 15. I expected to sell it at 15, but I only was able to sell it at 12 or even at 11. Well, I made a loss. I made a negative added value, and the bank made a positive added value of 2. Yes, the one who raises his hand, please go ahead. Who are you? Who is raising his hand?
Professor, I was just removing mine right now.
Okay. Okay, remove it. Mirza, you want to speak? You have a question?
No,
A
Professor.
comment?
No.
Professor, when the governments collect taxes from the people, what are they owning? I mean, you said the ownership will entitle. So what entitles the government to take taxes?
Oh, well, that's not really business. Now, you are not talking about business. What entitles the government to take taxes
By voting.
is the implicit social needs for government, needs for judicial system, for security, etc. And that implicit acceptance of being part of that society, and you need to provide for these collective services that no one alone can make them. So they need a collective body, or a body that represents all of us together. And that body, of course, needs to be financed. It's not based on ownership at all. It's based on that implicit understanding between all of us that we need collective services that cannot be done individually by any one of us. This is what justifies the government to make taxes. Okay.
Okay.
I see a hand here raised. Whose hand is that? Either take it out or go ahead and ask your question. Okay, continue, Ya Afaf.
Okay, the real play of the market forces determines the shares of contributors to wealth creation. The real play must be free from any artificial or implanted distortion. Financial transactions that create debts are based on real wealth producing assets, while financial transactions that are based on debts are not acceptable because they do not produce any added value. The real assets that produce increment utilities create wealth, which may be shared or owned by the asset owner or owners.
Okay. Okay, I mean, this is understood, and that we will discuss all the time anyway.
Prof, that's the difference between transfer wealth and create wealth. Yes?
Yes, in a sense. Yes. Yes.
Okay. Second element is sticking to assets.
Now, just one moment, Afaf. For you, Ya Hassan Mahfouz, by what virtue, if the government collects zakah, by what virtue the government collects zakah? It's only by virtue of being Muslim. And as a Muslim, if the government decides that it is going to collect zakah, then you are required by your religion, by Allah, to give it to the government based on خُذْ مِنْ أَمْوَالِهِمْ صَدَقَةً. So not every, and this is, what is zakah? Is a transfer of wealth, really. This is not price, and it does not create added value. It is a transfer of wealth from the rich to the poor, clearly.
I see. So I think we are talking in the business context, in the
Yeah. So when we
individual
talk in the business contact, in the market contact, this is where you need ownership to earn. But the government earns on different bases. Zakah is paid also on different bases, and so on. Okay. طيب. Continue, please, Ya Afaf.
Okay. The second one is sticking to assets goods. Islamic finance is repeatedly characterized as asset-based finance. Asset-based doesn't mean equity-based. It really means that finance can only be provided on the basis of ownership of wealth creation assets or goods services, so that the return of the finance provider would arise from sale at a higher price in the case of murabaha and its likes, value of utility generated in the case of leasing, or return from use of assets to create value adding goods or services in the case of equity financing, musharaka or mudaraba.
Okay, continue. Go ahead.
In Islamic finance, resources are channeled only through sale, leases, or equity contributions, with the immediate implication that all financial transactions shall always be backed by real market transactions in such a way that each finance transaction gives a real market signal, so that at no time do the financial layers of Moric layers upside down pyramid become more than the real market transaction layers.
Sorry, this is not clear to me.
Okay,
the market signal. Yeah.
As we know, that the Islamic financial are based in the lease or sale or contributions, so that okay.
يعني the channels to generate added value are sale, lease, or creating new projects, or expanding existing projects, so that there are no more channels beyond that to create added value. And these three channels are based on asset-based, equity-based, that is based on property, on ownership of property that generates added value. So what is the thing that need more explanation?
No, the last sentence says the upside down pyramid Morris Alice. What is this Morris
Yeah,
Alice?
this is because, okay, now this is the idea where in Islamic finance, there cannot be any creation of different layers of finance above the real market. The upside down pyramid is that the capitalist economy consists of a small real market compared to the layers that come above it that are pure financial assets and financial transactions, financial layers. Each layer is larger than the layer below it, and that makes the capitalist economy very vulnerable to any shaking, and it is unstable by its nature, by its structure. Being structured that way, that makes it unstable. The Islamic economy, based on the principles in when financing is based on sale, leasing, or equity contributions, cannot be unstable because it cannot create different layers of finance. Each one is larger than the one below it. Rather, it creates layers of finance smaller than the real economy. So the real economy you start with, the financing will be definitely smaller than the amount of the real transactions. So it is a smaller layer, and there is no trading of debts above that. There is no other layer that can be created. And when we create layer through real property transfer, then those will be very minor and very small on the side. So it's not really an added layer of any substance. Like, for instance, when IDB finances a company in Pakistan through the Industrial Bank of Pakistan. So there is a murabaha line of credit here. So line of credit, anyway, it's a partial practice and not the common practice. And it cannot be, by its own nature, cannot be the common practice, because it applies only when one bank needs another help from another bank. And and even that, you cannot sell the debt of it still. So even when you create another layer, that other layer will be much smaller even. Okay?
Okay. I think we discussed this last week also, this idea of the FX market and the derivatives market. So this is the same idea, right?
Well, relates, but derivative market is different. The derivative is by, we do not accept derivatives because of their lack of truthfulness. They are not true assets. They are not real assets. So they cannot be discussed and traded, cannot be accepted even to begin with.
Okay.
Okay.
The third one is minimizing speculation in currency and other markets. So every activity or production for the market is always based on expectation with the risk of failure. There are some differences between trade and speculation. The latter is much more volatile and a lot less associated with any real life activities or services. In currencies and goods and silver, speculation is reduced by the requirement of full and immediate payment, as mentioned by the Prophet Muhammad sallallahu alaihi wasallam.
So definitely, I wouldn't imagine the Islamic Bank holding foreign currencies for its own. An Islamic bank doesn't deal with foreign currencies, doesn't need foreign currencies of its own. So when a customer wants a transaction in foreign currency, the Islamic bank may be an intermediary in it, in buying it or selling it in the international market as an intermediary only. Here, probably as a simsar, as a broker, not really as an owner. It doesn't need to own that, and it doesn't need at all to deal with, to trade foreign currencies as a source of profit for the Islamic Bank. Islamic Bank is not really a sarraf. The sarraf may need only as much as he expects his customers will need. And if the Islamic Bank acts as a sarraf also, then only to that extent what it expect to sell in a day or week or so, or otherwise it will be kind of keeping its resources idle if it buys foreign currencies to trade them. So I don't, and this is where Mirza especially, please realize the difference. What we are calling for is not an Islamic bank that trade foreign currencies. It's an Islamic bank that is only an intermediary in foreign currencies, and not an Islamic bank that trade financial assets. All financial assets are not for that. So when an Islamic bank keeps some financial asset like sukuk, for instance, they keep them simply instead of keeping cash, because these sukuk are easy to, especially when they are sovereign sukuk, easy to be cashed or easy to be used as cash reserves. So, but not really to trade financial assets. This trading of financial assets is not a business of financial intermediation. When you play with the money of other people, you give that money for financing as a financial intermediation, financing for the real goods, the real market of production and trade of goods and services. Okay, continue, please.
In quasi-currency markets, such as the four commodities mentioned in the same saying of the Prophet Muhammad ﷺ, similar conditions are also required, which lead to reducing speculation too. In other commodity and capital markets, speculation is minimized by the requirements of ownership and possession before any further transactions, as well as by elimination of tools and behaviors that are generally described as speculative, such as sale of warrants, index, and options contracts for the difference betting on goods and currencies and their trading.
Yeah, by the way, يعني, whoever raises his hand, please go ahead, say your question or comment.
Yes, Prophet. Prophet, as a question, when we open a foreign currency mudarba account in an Islamic bank, the Islamic bank used to give some profit, very nominal, according to their. So how they manage profit from foreign currency in mudarba pool, from mudarba?
Well, essentially, يعني مثلا in America, you cannot really open a foreign currency account except in a few banks only in Chicago or in New York. So banks deal with the local currency. So essentially, banks should deal with the local currency, not with the foreign currency. The situation here in Turkey is definitely not a normal situation when you have about 60% of deposits in all in the banking system are in foreign currencies. This is not really a normal situation. So essentially then there are no deposits in foreign currencies. and deposits in foreign currencies are temporary, not really for investment in foreign currencies. Now, if an Islamic bank has a window or a branch of its activities to deal in foreign currencies, in foreign countries, then the profit must be coming from financing in foreign currencies, in foreign countries, not from trading foreign currencies. Foreign currencies are essentially not for trade. I really personally consider it a miracle of the Prophet Muhammad sallallahu alaihi wasallam that he made trading foreign currencies very difficult. He made trading foreign currencies very difficult by requiring hand-to-hand payment of both of them immediately, which really makes it difficult. You cannot have any time element between them, to the extent that some of the companions, when the other companion told him, let me go down and get you the gold instead of the silver, go inside my house. They were at the door. And he asked me, I told him, no, give me my silver now. I'll keep it in my hand, and go get your gold from inside, and we will exchange it together. To that extent, our companions understood it. So the point here is making it difficult that we are not supposed to trade currencies. You invest in a different country, and the return of deposits in dollar, for instance, should come from the return of investment in outside Turkey here, not really from trading currencies, definitely. And I didn't give my deposit for trading currencies. I could have traded it on my own. I mean, why should I give it to as a deposit in an Islamic bank or conventional bank for trading? It's not from trading. It is from investment that is done in foreign countries that uses this foreign currency. That where if there is any profit, that should be coming from it, from financing, giving in those other countries. The other hand, please. Who's the other hand, please?
Prof, are the quasi currencies limited to the four kinds, or we can expand it to other commodity that share same characteristics?
Well, let's deal with it. Honestly, it's going to come with us later anyway. But here, the Prophet sallallahu alaihi wasallam mentioned other four items. Historically, our fuqaha, I am sorry to say, including Shafi'i and Abu Hanifa and Abu Yusuf and Malik and everybody, okay? I mean, think of it, please, for God's sake. What if an item is traded between people by weight, by kilo, or if it is traded by volume? Is that an element that makes riba, that makes something should be haram or halal? That's
No.
not an element. And I wonder why those big imams thought of that the concept of these four items, because it is makil and muddakhar. That is because you use volume and and it survive. It can live for long, this date, and by volume. So if we change the use of volume and make it used by kilo, now today we use date by kilo, not by volume. It was by volume. Is that volume or weight? Is it an element of halal and haram? Can it be an element of halal and haram? For God's sake, how I cannot imagine now how these big imams fall into this a horrible mistake. In my opinion, it is a horrible mistake. What does weighing or taking it by volume have to do with halal or haram? Has nothing to do with it. Then, in fact, these four items, 3 of them are basic food. The other one is not really a food.
Salt.
Salt.
Salt,
And
yeah.
it's not really a food, it's an additive, a small additive, and even a harmful additive. So why should it be being a food? Why not almond, for instance? I eat more almond than I eat salt. Literally, because almond is useful for the heart. Okay, and I have had heart problems, so I eat more almond than salt. I don't take salt. I don't put salt in my food. I take the salt, the natural that comes from tomato and other things. So salt is not really a food stuff. The others are fundamental, basic food stuff. Date and wheat and barley. Date for the Arabs at that time was the major, almost the only food stuff. So
Probably,
why
Professor,
they took? Yes, go ahead.
Salt might be used for preserving this stuff for a long life, you know.
Yes, yes, the idea of being, yes, it is preserved. All of them can be preserved. The idea of being preserved is not a wrong idea at all. That's definitely a right idea. But to say that being by volume and preserved, that doesn't make sense. Why? Preserved, there are many things. Almond is more preserved than wheat even. And insects come much less to almond than to wheat, or to walnut than to wheat, because the strength of the trees of both almond and almond and what is this, walnut. Okay, they are, the wheat can have more insect than these items because of the strength of the tree. But anyway, I wouldn't imagine, why did they mention measured by volume or measured by weight as an element? That cannot be element of halal and haram. So being, yes, preserved, being can live for long without being affected, being divisible easily. Yes, you can divide it into small quantities. Well, all these are elements to use it as money. So they are really, the point is that they are quasi money. Now, to answer your question, Sami, any item that you take by analogy to these 4 items, any item that is divisible and can be used as quasi money, like for instance, coffee bean. Coffee bean is being used today in the world as quasi money in some areas. So that can be, yes, by analogy, you take coffee bean as an item that to which these rules apply also. Okay.
Okay.
So
Thank you.
okay, I have more than one hand. Go ahead, Jehoun.
Yes.
Very much, Professor. I just raised my hand while the topic about the foreign currencies was discussed. Basically, what I understood in the participation bank or the Islamic bank in Turkey, when you are dealing with your local currency, which is Turkish liras, you have no problem. But once you are going to deal with the foreign currency, let's say US dollars, then it appears to be a problem, because you cannot, like, any transaction you do, as they justify, they do it through the World Bank. Then it, let's say you transfer to other account your own money from your account to other account. They charge you fees for that in the participation bank in Turkey. So
Yes.
in Kuwait, but they don't do it for the local currency. So asking what's the reason for that, they said that it goes through the World Bank, then the rate and everything. So at the end of the day, it appears to me as they're trading or I don't know how to call it, but why there is no charges for the local currencies, but they go for the foreign currencies if they should have some reserves or some warranties because you put your money in a saving account in this bank.
Yes,
But
it is essentially because they cannot really use it. And that is why the return on it is 0.5%, whereas the return on the Turkish lira is 14% in the saving account. So this is the nature of it. Yeah, they don't use it, not for trading. These are not kept for trading. Anyway, the exception of Turkey is not an exception for Islamic banks. It is an exception for all banks. Deposits in bank. Turkey is one of the rare countries that allow you to open in a bank a gold account. I never heard of it. I mean, I am now 82 years old, and I never heard of any bank until I came to Turkey that you can open a gold account in a bank. I know I can open a gold account with the broker in America, buys me gold, and the gold is stored in the appropriate storage. Real gold. Yes, but that's not a bank account. That's a broker there, and the storage is in the appropriate storage in New York. So that's different thing. But here you open even a gold account, not only a foreign currency account. It's strange. I think we need really to a good reform of the banking system from Islamic point of view here is necessary in Turkey. And please, anyone who can make this word reach the people who take decision around or who advise Erdogan on decisions in this regard, that they really need a lot of reform in this area. Okay, I see a hand now. Whoever is has his hand, go ahead.
Yes, Professor. For example, if I have a cash check, a post-dated cash check, for example, for 31st March, and it is in US dollars, but I want the funds immediately, the cash immediately. Can I sell it on the face value? For example, if someone, for example, if I give it to you that on the maturity date you have a cash check, you can take money from the bank, but right now you pay me $15,000. Is it possible?
Uh, One, we are not in a fatwa session. You send me an email and I'll give you fatwa on that. But two, it is illegal to write a post-dated check. And even if some countries practice that, even in those countries that practice it, it is still illegal. The check is a way of payment, is not really an amount of money, and it's not money. So it's a way of payment only, and must not be written post-dated. This is one. Now, yes, it is permissible to get to exchange it with a friend at face value. It's as if that friend lent you that money and he will take it at the beginning of the month. But at face value, yes, only. He takes the risk that you may not have a balance, but that is a risk he takes, yes. And a risk, of course, you take because there is a jail penalty if you issue a check without balance. Okay.
Now, for example, Professor, if I have a check of a foreign customer who lives in, for example, in USA, and he gave me a foreign check, and the check amount, for example, is $10,000, and I brought to you that I want my cash immediately. So can I exchange it for $15,000 a foreign check? This means as a company, I can also change. If I am a company and I receive a check from another company.
For the face value?
Yes.
Only for the face value. Yes, you can change it. If it is a check, or even not necessarily a check, even a promissory note that is payable after 3 months in foreign currency.
Okay.
You can change it. Wait a minute. Wait. As a loan, you can make it. A friend can give you a loan and wait for you to pay it. But as a sale, no, you cannot make it as a sale. And the loan remains guaranteed, is a debt, remains a debt. Even if the check is not paid, the debt remains on you. This is a loan. And he took that check as a security. So a loan definitely can be given in any currency and paid back in the same currency it is given with. But no, you cannot make an exchange, a sale, like final, because a loan remains in the on you until it is paid. Whereas a sale is different. You cannot give a sale that is due after a period of time for an amount that is now. It has to be hand to hand, not hand to deferred. But as a loan, yes, it can be. Okay, let's continue then.
Okay, the first one is developmentalist approach. So when finance is founded on realism and directly associated with weight-reducing assets goods, it becomes developmental by its nature, as each financial transaction necessarily gives a direct market signal, which enhances producers to regenerate the deposits of assets goods.
So in other words, that when finance goes through sale, lease, or equity in project, musharaka or mudaraba, really let's not say equity because it's not specific. Musharaka or mudaraba or sharing in general is more specific because it means there is an objective to make profit. Ownership alone doesn't have to have objective to make profit, but here sharing is objective with the objective to make profit. So if it is sale, lease, or sharing, then it always gives a developmental signal in the market. That's the meaning. It is always developmental. It cannot be other than developmental. Okay, even when we talk about financing consumers, because we give a market signal to the producer. Okay, continue, please.
Okay, and the last one is inclusiveness. So the nature of Islamic finance being based on real life goods, services, and known and recognized rules of sale, lease, and sharing, which are not vulnerable to any exclusiveness measures or discriminatory processes, makes it inclusive to all people on the basis of the positive criteria of risk trust interaction. The methodologies of Islamic finance, sale, lease, and equity sharing are described, adopted, and accessible by all persons regardless of faith, ethnicity, and color, and geographical location, as they are detailed in all commercial laws, customary practices, and approved in all religions.
So the idea here is, of course, riba-based financing excludes Muslim from it. And those who abide by the Islamic teaching definitely wouldn't accept to deal. And this is why most Muslim population were refusing to deal with conventional banks until Islamic banks are established. So the idea here to include everybody, and it doesn't matter for non-Muslims to deal with this way. So non-Muslims can deal with the Islamic banks, and also Muslims can deal with the Islamic banks, and that's what makes it inclusive to all people without exclusion. Besides, also, it is inclusive in a sense that it applies to everybody. It does not exclude from the transaction anybody. It applies all over to the rich and the poor in an equivalent manner. Okay, continue, please.
So how to reform the finance sector? We need to reform the rules of the game in finance. The first rule is to earn only if you own an asset that creates wealth. Second rule is no fake assets and no fake transactions. The third one is morally based screen of assets and transactions.
Now, let's notice, yani, these three rules, are they specific to Muslims?
Yeah,
Not really, need not to be specific to Muslims. So here we are talking about the, rules of that a human being accept. Is it not fair to say if you want to earn, you have to own an asset that creates added value? And is it not fair and reasonable to say, let's not deal with fake assets or fake transactions? And is it not also fair to say that we need to deal with morally accepted goods and ways of dealing? Both. Now, is it not يعني acceptable humanly on all human bases, especially for the third one, when we add to it that the moral foundation is a scientific foundation that is, literally speaking, I mean exactly what I'm going to say. Even some of you may have some questions or objection. Even I mean what I'm going to say. Only what is scientifically proved harmful is haram, and anything that is not scientifically proved harmful is not haram, whether in goods or in services. Now, isn't that fair and that is acceptable by all normal minds? Yani, clearly, the verse 157 of Surah number 7 says what is prohibited is only what is khabith. And khabith means harmful, means bad for a human being. It could be bad for environment or bad for other creatures also. But it is definitely bad for human beings. So this is definitely what is not acceptable, is what is khabith. And there is nothing that is not khabith that is prohibited again. Even in matters of entertainment, anything that is not khabith is not prohibited. And well, we go by that, we go by the scientific evidence. This is why for a long time people thought that cigarettes are okay, it's fun to smoke and it's pleasure, until we have realized scientifically that it is really harmful. So now we say it clearly that cigarettes are not permissible, not to finance and not to use, etc., not even to produce. Continue, please.
The main components of Islamic finance in spider firm. The first one is gradual elimination of all zero-sum and other speculative contracts. As zero-sum and other speculative contracts, such as the short sale of commodities, shares, and currencies, do not produce any added value and only transfer wealth from losers to winners. They are by their nature parasitic to the real sector. They also distort resource allocation by attracting human and financial resources that could otherwise be used in the real markets. So it includes the short contracts in all commodities, currencies, and equity markets and their likes, contracts for the difference, internet currency forums, internet forex trades, trading index, and betting on currency prices.
Okay, continue. Go ahead.
The second one, gradual elimination of credit, insurance derivative, and other derivatives. So first, stop option trading, limit option to hedging only, buy or sell to hedge and already existing position. Disallow securitization of credit derivatives and credit insurance contracts.
Okay, continue, please.
The third one, gradual removal from the market of speculative patterns of behavior. In the past, there may have been some benefits of day traders, markets makers, and other speculators in the financial markets, but two important elements not related to each other took place in the last few decades. The first is huge improvement of communication and internet connections. The second, increased ability of trading in regulated markets across political borders. So the both elements created a huge platform for supplies to meet demanders in all markets, especially money, commodity, and capital markets in all corners of the world. So what we need to disallow day trading in all markets, eliminate markets maker, and kick them out of the organized market, reduce markets accessibility, and lengthen the trade process.
You notice you have a lot of French pronunciations in English.
Yes, yes.
Go ahead, continue, please.
I'm
Prof,
sorry
the
for
third
that.
one, can you explain the third one? Reduce market accessibility.
I mean, almost all economists today call that we don't need 24/7 market accessibility. Why not making it 2 hours a day only? Why not making it day on and day off? Why do you need all these transactions that are really not needed? All you need is a window for people to liquidate if they need to liquidate, and people to invest for new things if they need to reinvest in new things. And you don't need really all these transactions that have multiplied the transactions unnecessarily and created only transfer of wealth from persons, from losers to winners and nothing else. So this is reduce the market accessibility, means making it 2 hours a day only, or even 2 hours a week. You don't need all that.
Okay, thank you, bro.
Okay, continue, please.
Genuine regulated markets. So economists are used to argue that trade creates value by incorporating real services to the traded items, such as risk-taking, packaging, transporting, retaining. Investments mean real capital information that increase the real productive capacity at both macro and micro levels. So Wall Street jargon changes that by considering sitting at night and kicking a few touches on keyboards, trading and investments that add no valued services to the traded items and any mechanism to the stock of goods that produce other goods and services. So all the financial markets needs to add conditions of genuineness,
Genuinizing.
genuinizing to equity trading to a way that to do away with leveraging, restrict commodity futures to held in real market position, restrict currency futures to regain real market position, and add condition defining who can trade currencies and as real players, not clicking rental
Now,
players.
restricting currency futures to hedging real market positions, this is only a step. Otherwise, all currency futures should be eliminated. This is a step, the gradual reform, not the ultimate objective. Okay? Continue, please.
Original finance to go strictly through sale, lease, and venture capital. In Islamic finance, credit is only provided through sale, lease, and equity sharing, venture capital. This has several important implications. For stability policy, where credit issuance cannot exceed the size of the real market needs, so that there will be a natural ceiling on credit creation and expansion of financial assets. The rate of return signal will no more be transmitted from the financial sector to the real market sectors. It rather will be transmitted from the real market to the financial markets.
Okay, continue.
The size of finance will be determined in the real market by the volume of real transactions, not by the credit creation capacity of the financial sector institutions.
In other words, here for you, Ya Hassan Mahfouz, we are not much worried about credit creation because credit creation cannot exceed the real market need in this approach. But when you create credit through loans, it may exceed it. So here it will not exceed at all the real transactions that are in the real market, sale, lease, or having new companies coming up. So we don't worry really about credit creation that, it may create problem. It won't. Okay, continue, please.
Need for a financial ombudsman, so المحاسب. The ombudsman. The creation of a financial ombudsman is necessary to look after events, incidences, and new products at their inception, and to check the compliance of new products and transactions with the spirit of the law, not only with its letters. So it is recommended that a financial ombudsman should be established in the big and influential markets. A national financial ombudsman may be created and consist of a representative of the domestic industry, the central bank, other stakeholders such as the Commission of Securities and Exchange Business Chambers, the academia, the concerned government departments. It will be competent to take action on individual players and to exert changes in regulation to implement the spirit and intent of law and regulation.
Okay, continue, please.
Create a standby last resort finance provider body. There is always a need to shun the real sector from any mischiefs in the financial sector, so that financial crisis would not be extended to the real sector and would not affect production and employment. We need to remove interbank debt transactions, remove securitization of debts along with the domino effect, remove debt scheduling, accept at face value, no return on credits unless real added value is generated in the real market, take away loans to the arena of personal relation by special non-banking institutions. What
the OIC Fiqh Academy in 2009 discussed the issue of need for personal loans and resolved that there is a need for creating non-banking institutions to give loans, especially awqaf, waqf, for giving loans. In fact, when I was in Qatar, very hard, we tried, Tariqullah and myself, to create a waqf, local waqf there, and we wanted to contribute to it really, to give loans only to those who need loans. We need this kind of institution in every community. Usually people help each other, in all societies, even in America. People help each other in a small community, if they are in a club, members in a club, or they are neighbors, or they are in any way, they give non-interest loans to each others. That exist in all societies, but we need to formalize it in certain areas, especially for those whose own network does not respond adequately to their needs. So we need that kind. We need a waqf for cash. Tfaddal, whoever is raise his hand,
Yeah,
please go ahead.
Professor, I really admire this idea of OIC, which I think you were behind it. Um, but how would this Waqf Bank or this Qard Hassan Bank cover its operational expenses? So, I mean, how will it be sustainable?
Oh, that's the easiest question. Not really. I thought you were going to ask a good question that you deserve to ask. I know you are much wiser than that. يعني يا Hassan, uh, now don't we have a rule that beneficiaries should pay for the expenses, the administrative expenses of, and you have it applied in IDB, in the good loans that IDB provides? This is a rule in Sharia, well known. But beside that, can't you make a waqf that has two branches, one small branch to invest and pay for the expenses, and the other branch is the main branch is for only giving loans and recovering them, and of course from the profit of the other branch you pay for expenses and also for the lost loans, because there will be some dead loans, no doubt about it. Yani some of them may not be recovered. So you need to make up for that and even make for growth. You can. Yani there is a 1,001 way to cover that. I thought the difficulty, in fact, is in creating it. Now, if you are willing to create it here in Istanbul, I am willing to contribute to it. Let's put it on the ground in reality. We can do that.
Inshallah, yes.
Inshallah. So this is the difficulty, is to have it really in a metropolitan area where you really need more effort to bring it to life.
But Professor, in your opinion, should this be regulated by the central bank or is it a non-banking institution?
It's non-banking, definitely. It should not be regulated by the central bank because it doesn't go for any banking activities. It doesn't earn from its banking. But يعني if we need good supervision, we need definitely a governmental supervision. I would say probably the best supervisor would be the state audit, for instance, that it should be subject to the state audit, what is called in Arabic Diwan al-Muhasaba or al-Muhasabat. The one I worked
Professor,
in Damascus for 9 years. This is the institution that probably should supervise this kind of institution. Definitely not the ANAT or not the Ministry of Awqaf. Okay, continue, Afan.
Professor, may I just ask, in this kind of WACF, in this kind of institution, as you mentioned, where do we get the initial the capital? Because this is from the Garda Sana, and the initial capital for lending, do we need to, raise funds, or what's the way to get the initial capital for this WACF?
Yes, of course, it's from me and you, from donations of people who are convinced of the idea. We give donation, that will be the seed capital for it.
I see, I got it. Thank you.
And this has been the seed capital for any waqf throughout our Islamic history.
So I mean only the personal, only the community or the neighborhood. You mean this Cape, right? Or even up to the bigger metropolis like
Yeah, I
Istanbul?
mean, it could be at a big, even, yani, it starts from a small community, and then once repeated in different communities, you may have a supervisory, one like a coordinator between them. It can be unified into a metropolitan. Definitely, and this was the objective of the cash waqf in Istanbul at the beginning when it were created since the 1700.
Got it. Thank you very much.
Okay.
Okay, continue, Afar.
What can central bank do? So that can create suitable regulation to provide definitions of Islamic finance contract that put them all in correct perspectives and standardize their practices.
So this is probably essentially, يعني with Islamic banks, what can central bank should do to reform the Islamic banks and make them always consistent with their objectives?
Reformulate and strengthen the Sharia governance, issue Sharia governance guidelines, compliance framework, and connect the sub to the central bank. Issue regulation for sukuk and introduce sovereign and corporate sukuk to enhance liquidity management. Eliminate poor cash transactions, no debt circulation, and no debt trade. 10 pure debt transaction in all banks, Islamic and conventional, by tying finance to goods assets as its objectives. Improve corporate governance in Islamic banks to recognize the right of investment account holders vis-à-vis stakeholders. Activate the alpha of Islamic financial services board as a function of recognizing the effect of on capital adequacy.
Sorry, this last point is not clear. The alpha of IFSB. What is alpha?
The alpha IFSB, in its study of the capital adequacy in Islamic banks, has an issue which is important because many central banks treat mudaraba based deposits in Islamic banks in the same way they treat deposit in conventional banks. These are, in fact, for Islamic banks, not debts on the bank. So the bank, these are quasi capital because they contribute essentially to profit and loss. They don't, they bear loss with the bank, and we may distribute to them lower profit if the year wasn't that good, or even losses if it were to be. So why not? In fact, I personally also call for the elimination of, and as mentioned by Afaf now, elimination of these reserves for equalizing profit and all that count. Let them work under market condition, and the bad bank, let it go bankrupt. Even if it were Islamic bank, if its management is bad, we don't need that bank. So the idea here is that the central bank should compromise the idea, because if an Islamic bank, of course, yani, the Islamic bank is part of the banking system. If an Islamic bank go bankrupt, that will affect the financial and monetary system in the country. So we don't want really those depositors to go just barehanded because the bank bankrupt. So we want to have adequate regulation so that prevents the bankruptcy of an Islamic bank in order to preserve the money of these depositors. So the idea here, we should make a compromise between considering all the deposits, mudaraba deposits in Islamic banks as loan on the banks, or considering them contributing to bearing losses also and part of capital. So what is the kind of compromise that make the bank responsible, and at the same time the bank management responsible, and at the same time do not affect the economy in case of malfunction of the management of the bank. So this is the alpha, that is the percentage of inclusion of mudaraba deposits within the capital adequacy calculation or not. So the alpha is between 0 and 1. How much of these deposits we consider that they also give us capital on which financing can depend. So the capital adequacy. So this is the alpha idea.
Okay.
Okay. Okay, you finished, right? Did you finish? Yeah.
Yes.
Yeah.
That's
This is
one.
okay. Last, or what is left?
No. So other necessary reforms.
Yeah, other necessary that are needed outside the Islamic banks. I think we need also to keep them because they have to go along with the reform in the bank. Go ahead, please, quickly with this.
Okay, so level the ground in tax changement to allow fair competition between Islamic and conventional banks, adopt clear macro
Still,
development.
in some countries, the tax system is not really appropriate. They consider sale in Islamic bank, buy and sell, they consider this subject to value added tax in some countries. It should not be really. It should be treated like we treat conventional banks. UK already solved that problems, but some Muslim countries and some other countries like India did not solve it yet. Okay.
Adopt clear macro development policy and enhance credit development allocation, especially towards micro, small, and medium enterprises. Enhance Sharia compliance, interbank markets, for example, murabaha line of credits, genuine reserve murabaha, and murabaha ijara swap. So that's all, and thank you.
That's all?
For listening. Yes.
Yeah. Okay, thank you very much. Yeah, Afaf, you did a good job, although please make the necessary correction on the history of banks and also on the definition, really, a solid definition of financial intermediation in the banking system.
Okay.
And functions of the bank. So make the correction and send it to your colleagues and copy to me. All.
Okay.
Professor, the last point I did not understand the reforms, the reverse murabaha and line of finance.
You see, the idea is that inter-Islamic banks and Islamic banks with conventional banks, any relationship between them are done in today, in most of the cases, through tawarruq. Tawarruq, or what they call also wakala istithmar. So we give wakala istithmar to another bank. I give you $1 million that I have for 3 months, and you buy platinum on my behalf and sell it to yourself at 2% payable after 3 months, and you become under debt to me for 102 million, and this is our plan. Instead of this, we need to activate the interbank murabaha line of credit and ijara based on line of credit also. If you activate these, then you don't need to make really these tawarruq transactions. This is the idea of this last one, number 3. Okay.
Okay, so this is similar to what IDB does sometimes. So it gives the line of credit
Yes,
to the
it's
banks
similar.
for
In fact,
real activities.
The line of credit, in fact, is an invention of IDB, but most other Islamic banks and central banks do not know about it even. Central banks that have Islamic banks in their countries, and most of them don't know even about it. IDB really should propagate that idea. I propagate that on behalf of IDB also. Okay, because
once in IDB, always in IDB. So you are still IDB for life.
yes, I have that spirit of IDB, and I definitely I have the what they call it in English. There is a word in English. What is it? الولاء يعني. I'm شو ها؟
Loyalty.
Loyal.
No, not yeah, loyalty. Yes, I am still loyal to IDB. Okay. Any question? Any other question? Anyone has a question?
I have one more question about the check. So can you
Yes.
explain to me the concept of a check? What is a check exactly? You said a post-dated check is illegal. So what exactly is a check?
A check is an order to pay money only. This is its legal definition even. It's an order to pay money.
Okay,
It's not money itself.
I see. But
So it is
from a
in that
Sharia
sense.
perspective, I mean, what are the rules regarding the check? I mean, what exactly should happen? Or
It's okay. It's permissible to use it. And if the law prevents writing a post-dated check, then it shouldn't be written. It's okay to make this kind of condition because that maintain its role as an order to pay only. So it's not anything beyond that. It should remain that way. And the Sharia accepts it as such, not as a transfer of money, an order to pay money. And this is why I said, if I pay you the amount of that check, now a friend pays to the other friend that amount, this is a loan, and the check becomes only a kind of security that I will have the payment on the due date. So it is a loan, and the loan remains in the dhimma, remains on the debtor until it is paid, regardless of that check. So it is not really an exchange of money for money. It is a loan of money. And a loan of money, who said it is haram? It is permissible to give loan of money, and you get it with the same currency without any difference, of course, and with disregard to the change of the value of the currency, except in certain situations where the currency really falls apart. Then there ought to be a reconciliation between the debtor and the creditor on how much to be paid. So that reconciliation can be either amicable between them alone or determined by a court. And that court, of course, will determine it on fair distribution of the disastrous loss on both of them.
so when you say it's an order from the account holder to the bank. So who is the order giving to?
Yes, the orderer is the account holder, and
Okay.
it is given to the bank. Please pay this amount of money to XYZ, and that order is only implemented if there is adequate amount in the account.
Okay.
And
Okay,
Professor,
any question?
one more
Now
thing.
we have
Yeah,
Sami. We
Professor.
have a paper summary by
Yes.
Sami, right?
Yes.
Ready, Sami, right? Well, any other question before we give Sami the time?
Secondly, Professor, I have a question regarding the Hassan has asked. We can also provide that loan in the other currency. For example, a security deposit or check is in dollars. Can we provide loan equivalent to dollars into the local currency, for example, Turkish lira?
You can give a loan in any currency, and the loan is due, it is payable when it is payable in the same currency that it is given. And if at the time of payment, without any prior condition, they agree on accepting payment in another currency, it will be at the price of between the two currencies on the day of payment. And that cannot be predetermined or preconditioned. The price cannot be predetermined, and the question cannot be, it cannot be also predetermined that provided you pay me in a different currency. And only in that, and you cannot give a loan in lira and say, let's assume I gave it to you in dollar, and the price of dollar is 14.5, then I give you the 14 and a half lira, that is then $1 loan. You cannot do that. If you give lira, then it is payable in lira. You cannot say, let's assume we gave it to you in dollar at the price of today. All these are made by the Prophet sallallahu alaihi wasallam himself, and I consider this, in spite of what you may think, ya Mirza, especially, in spite of that, I consider this a miracle by the Prophet, because he does not want to allow trading currencies, profiteering from currencies. You don't do that. This is not a business in Islam. This is not a business you make profit from at all. And rather, holding a foreign currency is kind of, some people consider it even sin, whether holding a dollar or foreign currency is kind of sinful, because you are holding it from circulation. Investing it is, of course, better. Don't hold it, whether gold or others, and so on. So this is a serious matter. This is the Prophet sallallahu alaihi wasallam made it, and he anticipated that there will be a lot of fake transactions based on that. And the Prophet sallallahu alaihi wasallam specifically said, he was asked that question, I may have a debt in gold or in silver, and when at the time of payment, the payer want to pay me in the other currency, because these were the two currencies. The debt is in gold, and he want to pay me in silver. The Prophet sallallahu alaihi wasallam told him, yes, it is permissible to make payment in silver with two conditions. One, you take the price between them of the day of payment. Two, you don't transfer an amount and keep it that is for a future due also. In other words, you cannot say, oh, you owe me $1,000, pay me now 600 in Turkish lira at the price of today. And since the price of today is 14 and a half, the other $400 are equal, so and so, and you pay them to me the day after tomorrow. That's not permissible. You transfer only the amount that is paid, and the remaining amount remained in dollar. And when it is paid, you look at the price on the day of payment. These are conditions made not by me, by the Prophet himself. In the hadith, that is clear. Hadith of Abdullah ibn Umar. So it is not by me or you or by any sheikh or any madhab.
So,
Okay.
Professor, so which means that we cannot mitigate the FX risk. So we cannot do like a hedging using the futures, or we
You
should just
cannot do
accept the
hedging
FX risk.
using the future. There is no future. When you talk about Islamic economy, definitely there is no future currencies at all, period. No future currencies permissible at all. But you can, and some Islamic banks do that, you can hedge for a future currency by investing in that future currency. That's a kind of hedging. You invest, you know, you have a payment of say $3 million in dollar. 3 months from now, invest now in a foreign currency, in a foreign country, in the foreign currency. Invest an amount, say in an Islamic bank in UK. Invest $3 million now, and 3 months for 3 months. After 3 months, you see what they are. You may lose or you may gain. Yes, you take that risk all the time. Yes.
So the conversion should take place on the date, and we cannot lock in the price, the exchange rate
You
in advance.
cannot lock in a price of currency in advance. That's period. And that is what the Prophet said, not anybody else. The Prophet sallallahu alaihi wasallam, he said that himself.
Okay,
يعني
this is
in
very clear.
Arabic he said بسعر يومه على أن يكون بسعر يومه.
So what is your take on the indexation, considering the inflation by paying the loan back?
Loans cannot be indexed, period. OIC Fiqh Academy discussed that issue يعني repeatedly and clearly. Loans cannot be indexed. What can be indexed, for instance, is wages for workers' wages. Workers' wages can be indexed because really the employment contract is an employment for one period, repetitive. That's the meaning of it. If a university here employs me on monthly basis, they paid at the end of each month. So my salary can be indexed, provided that indexation applies from the beginning of the ijara period forward, not backward. In other words, now we are on the 12th of the month today. The salary that is payable to me at the end of the month cannot be indexed now. If it were indexed from the beginning of the month, that from the beginning of the year, for instance, there was a law or there was an agreement that at the end of each month we look at the price of that month, so that then it can be indexed. In other words, the salary should be known at the beginning of the month. What is it going to be? Not that you index it after the labor is provided, the labor hours. It should be indexed before the labor hours are provided. And OIC Academy clearly said loans cannot be indexed whatsoever. In their last decision in 2021, they said if there is a problem, then there should be a reconciliation, amicable or through court, between the two parties.
Or the concept of paying with hasana. So we cannot stipulate it with the principal amount, but at least we can compensate the other person.
Well, paying with hasana is not a precondition. You
Yes,
can
sir.
pay with any hasana that you like.
Yeah, even with a smile.
With a smile, yes, beautiful smile. Yes. But you cannot
Thank you,
pay
sir.
And you cannot precondition the hasana.
Okay, but at the end we can compensate even in if fulus, we can give extra fulus also.
No, there is no difference between this is stupid argument. There is no argument for difference between fulus and paper currency and gold and silver or dollar. No, they are all the same. They are currency. So currency is currency. Don't take
Okay.
that minute يعني discussion that is based on lack of understanding. It's not. It's nothing. Is nothing. There's no
Okay.
difference. Who said fulus? This is historical garbage. Pure
No, no, I mean
historical
that.
garbage.
No, I mean that if I'm paying $1,000, so if I'm paying $1,000, so I can pay in dollars some extra to compensate, or I can give some gift, flour or sweets, etc. So I can pay currency also.
You can, yes, you can give additional dollars. And why?
Is
أحسنكم خيركم قضاء. The Prophet sallallahu alaihi wasallam said. Okay. So if you are under debt of $1,000, give it $1,200. That's beautiful. Why not? Give it $1,300. Give it $2,000. Nobody holds you to do that. You can do that, yes, and it is beautiful. It's better to do that, and you are rewarded by God to do that also. So that's not as long as there is no precondition or custom, usual and customary. If it becomes usual and customary, it's like precondition. Okay?
okay, sir. Thank you, sir. Thank you.
Okay, so take it with a smile. Yalla ya Sami, it's your turn.
Yes, I will share my screen.
Yes. Okay, I am asked by my fair lady to lower my voice. Is my voice too high
No,
for you guys?
it's okay. It's okay.
It's okay, okay. But my wife tells me here, lower your voice.
Professor, before Brother Sami started, you have added me to the Advanced Islamic Economics, but not Finance in Teams group. I was added. I joined the class through the link that Brother Hassan shared, but I don't have the class in my Teams group. I guess you haven't probably
I
added
have,
it.
please send me an appropriate email and I will add you through that email. The same
course.
thing for Abdel Nasser. Yeah, Abdel Nasser.
Yes.
Send me
Yes,
an
Prof.
appropriate email. I'll put
I
you
sent you
on
an
the
email with
appropriate email that you like.
the university portal.
Sure, I will inshallah send as well, because otherwise we can't see the
I
reports
sent
and
it.
all this.
Okay, so
Can
please
you
do
see my
send me the
screen?
appropriate email and I'll add you on the appropriate email that you like. Okay, go ahead, ya Sami.
Can
Quickly.
you see my screen? Okay. The title of the chapter of book is Budget Deficit and Instrument of Public Borrowing in Islamic System. This chapter was published in 2014 from Handbook on Islamic and Economic Life by Prof. Monzer Kahf. The main objectives of this chapter are to explain the instruments of public borrowing, methodologies of its application in Islamic system to be an Islamic alternative for governments, and the characteristic of each instrument. The writer listed the main reasons of public deficit in Islamic country at recent time, which is corruption and wasteful spending, price subsidies, inefficient and large public sector, and high deficit expenditures. Then he explains the reasons of market failure to provide efficient mechanism of production and distribution of goods, which are non-rivalry and non-excludability. The writer suggests that we can solve this by enabling an equal chance between competitors and a virtue of political choice. Moreover, the market can be active when some public goods and services provided by non-governmental providers like voluntary organization and private sector without breaking some conditions. The main section of this chapter is the financial instruments. He classified it into the first category is non-debt financial instrument, and he defined it as certificate issued with regard to Sharia compatible forms of financing which allow the financer a certain return and are at the same time negotiable. It's clear?
Yeah, go ahead.
Okay. The first item of this category is إجارة instrument. The way that إجارة instrument work is certificate are issued to the public as title of ownership of real estate, machinery and equipment, airplanes, ships, or any other long living assets. These fixed assets are rented to the government. Certificate holders receive the share of the rent. This certificate negotiable and sold at market price, and it classified it to three types. It can be perpetual or renewable, temporary, and declining إجارة. The second type, شركة based, it's and from profit and loss sharing. Similar to common stocks in almost all aspects, provided that do not have any prohibited conditions. It's negotiable and sold at market price. مضاربة offer for specific investment or group of project under the management of one مضارب, provided that the project or group can be identified accounting wise, so that a profit and loss account may be made distinct. It can be issued for short or medium or long term investment, and perpetual or issued for certain period. It's negotiable and sold at market price when it is not represent cash or debt. The إيجار, I forget something about إيجار certificate. It's for generated income and non-generated income projects. Output sharing. Sharing the output provided non-violation of capital is needed because no valuation of capital is needed because valuation is subject to value judgment. Hence, it requires that income generating property is handed over to a manager or the basis of sharing the output. It's negotiable and sold at market price. The second category is public debt modes and certificate. It's a debt-based financing is then an alternative and supplements to ownership-based finance for seasonal needs to bridge timing gap between revenue collection and expenditure disbursements, or because ownership instrument may fail to attract investor. Debt-based modes or financing the public sector cannot be negotiable. The first category of this classification, markup-based public debt مضاربة. The government assigns one of its bodies to work as agent of the public in acquiring goods in order from the government. These goods shall be paid for in cash from funds obtained from the public to finance the operations. Upon completion of sale of goods purchased on order and receipt of the small denomination murabaha bonds from the government for the amount of the contract, The agent will distribute these bonds to the contributors of funds in proportion of their principal. It's not transferable to the other owner except at face value, and it can be redeemed by the government before maturity. Second one, markup-based public debt istisna, used for construction with payment taking the of IOUs due at point of times subsequent to the date of delivery of complete construction. It's not transferable to other owners except at face value, and it can be redeemed by the government before maturity also. Salam certificate, government owned owned enterprise or firms which produce consumer goods may sell part or all their output on Salam basis. Salam certificates of independentness of small denominations of quantities of goods may thus be issued to purchasers. It is not negotiable and it can be redeemed before maturity by cancelling the contract. The fourth one, istisna coupons. The government sell future housing units with specification and delivery date. Put in the prospectus at the price of say 100 dinars for each 1,000 of a unit. Whoever buy 1,000 coupons will get a house. These housing coupons are also not negotiable, but they can be redeemed before maturity by cancelling the istisna contract. Public utility warranties, a combination of recurrent supply agreement istijrar combines with some of the feature of Salam. Provided Sharia permits, a utility public sector corporation may contract its consumer on sale of certain quantity they draw in the future at price marked down from current price. It may also be fixed. It is not negotiable and it can be redeemed before maturity by cancelling the contract. The sixth one, Ijara bonds. It's a contract to sell a service for advance payment with a future service. It's not negotiable and may be redeemed before the maturity for the paid price. In my opinion, all these instruments that mentioned in this chapter are applicable and it will help to get a fund in many ways upon the government's needs. But I think if we want to apply these solutions, we need these critical requirements. The first one, trust of governments for individual, because if this missed, nobody will give the government fund in the instrument of ownerships. The second one, set a clear policy to get the fund from those instruments, not use it on the random choice. The third one, define a well-known and mandatory responsibility of non-voluntary organization, individuals and public sector. Finally, if we look for solution for efficient usage of the zakah and waqf and other Islamic revenues, we don't need any of borrowing instruments.
Okay. Thank you, Sami.
Welcome.
Any question on this paper? And these papers, please notice, are included into the final exam.
This is I see another term paper for you, Prof, that talk about the same things, but that's right.
Yeah, could be.
Yes.
Yeah,
Okay.
Professor, I have a question here about the
Yes.
sukuk. How valid or permissible it is to guarantee the purchase by the government at maturity? Is it okay, or should it be at the market value? Because typically the maturity price and everything is fixed. So what do you think about this?
Of course, it varies depending on the nature of the contract that underlie the sukuk. So when you talk about ijara sukuk, for instance, they are redeemable at the face value because you get the rent as their return, and they are redeemable at the face value. And that is permissible. Who said otherwise? Why it cannot be permissible? But
No, I mean, I'm talking about the guarantee. I mean, can the
just
government
one moment.
guarantee? Okay.
Yes, one moment, please. Notice you should keep in mind that we are not talking about tawarruq, and I never accepted tawarruq in all my writings. We talk about ijara sukuk, that is, we got, say, a bridge built on wakala basis by a government agency, and it is now on behalf of the sukuk holders. So the sukuk holders own it, and it was never in existence before. So now the government guarantees the face value of it on payment, whether on gradual way on installments or on one payment. So this is no doubt permissible. Now, if you want to add a guarantee like what IDB did, there is an entity that is separate from IDB, which is the unit trust of Islamic banks that was managed by a committee headed by Sheikh Saleh Kamil, rahimahullah. I don't know how is it now, what happened after these 20 years I left. I don't know what happened to this investment unit fund of Islamic banks. Now, the IDB may sell to these the funds ijara contract, and it may provide a third-party guarantee, or even, in fact, it is a second-party guarantee because it is the one who sell them. They guarantee that these debtors of ijara, of the rent in the ijara, and of the promise to buy the original asset, the bank guarantee, that kind of guarantee is second party guarantee and is permissible. Third party guarantee is also permissible, but it takes a different form. Like, for instance, the municipality of Amman in Jordan has a piece of land and want to make a complex of high rises on that, and it issues sukuk that represent the construction, the buildings. And then the Ministry of Finance guarantees the municipality of Amman in Jordan, because we agree in fiqh, we accepted the idea that municipalities are different from the government, whereas ministries are not different from one from the other. So municipality may be guaranteed by the Ministry of Finance, but the Ministry of Agriculture cannot be guaranteed if it issues sukuk by the Ministry of Finance, because they are one body financially. So here the municipality may be guaranteed as a third party guarantee by the Ministry of Finance, and the third party guarantee can cover anything, because like that joke of Shah Fahad, that you want a guarantee from a third party, then you can give anything. It is hasana, because third party guarantee is hasana. You can give anything. You can guarantee the rent, you can guarantee principal, you can guarantee $1,000 above principal, you can guarantee anything because it's a donation from a third party. But now the third party should be questioned by where does it come, does it take its resources from? If it is from taxpayer and there is a functioning parliament, then that functioning parliament will ask the government, why did you guarantee that 1,000 more for X or Y or Z or for that issue? all owners of that issue of a sukuk. That is a question definitely the government should answer in front of the parliament, and that may not be justified really, but guaranteeing a profit or a principal under certain circumstances, especially for say infant industries or for important projects like a bridge, a major bridge that connect connect Palestine, non-occupied Palestine after it is free bi'idhnillah, with the East Bank, which is Jordan. Jordan will become East Bank of Palestine anyway. It used to be East Bank of Palestine. So anyway, that bridge is very important and very vital for the development of both countries. Yes, they can guarantee then and can justify that in front of the parliament. So yes, third party guarantee is based on donation, on do whatever you like with your money. And you do whatever you like with your money. It's like giving hasana above the payment of the loan. So you can give as much as you like and whatever you like. There is no limit for that. Okay?
Okay, but the borrower, the lessee cannot guarantee, right? The third party guarantee is better.
The third party guarantee is open and free. The lessee provides second party guarantee because the lessee is required to make payment. So you are required to provide. I mean, you may be asked, not required. If the creditor doesn't want to accept to give you a lease contract without guarantee of the rent, so yeah, definitely you have to provide guarantee as a second party guarantee. Give a guarantor that if you don't pay the rent, he will pay on your behalf in your place. That is, of course, permissible.
But the confusion in my mind is if we are guaranteeing that at the end of the lease period, the government will buy back from the sukuk holders. Are we combining two contracts? I'm thinking in that sense.
Well, remove the word back. Buy, not buy back.
Yeah, buy, yeah.
Okay, buy, because it didn't sell them. If it sells them at the beginning, then it is tawarruq. It's haram. It's pure interest. But no, they build that. The government build it for them on wakala, but it is they own it. They build it with their own money. Okay, now the government buys it from them. That's okay. It's the second party guarantee is required from the debtor, and a third party guarantee is when the debtor when there is no application of second party guarantee, you take third party, like in mudaraba, guaranteeing the profit in mudaraba. Yes, third party guarantee can guarantee a profit in mudaraba and can guarantee the principal and can guarantee any amount above both. But that's a third party guarantee based on donation. So where is the confusion? I don't see it.
No. I mean, are we combining two contracts? So government in the first contract is leasing from the sukuk holders, and then the government is also buying back at the end, of the
combining two contracts. That is when they contradict each other. That has been solved long time ago. For instance, in ijara sukuk, there is a contract of ijara. You cannot combine with it a contract of sale. You can give a promise to buy, a promise of sale. And then the sale will be done in the future by a contract that will be done in the future. Either consecutive contracts, each month a contract, say, for a small part. And then the lease will decline. So these are when the two contracts are on the same thing. If you sold it, then you don't deserve rent. This is combination of two contracts. But combination of two contracts that are the sale contract will apply in the future on the part that you don't own, that the bank owns, then that is okay, or that the sukuk holders own. And the rent contract applies on the part that the sukuk holders own until they sell it. And once they sell it, the lease contract does not apply anymore. So this is not combination of two contracts that is haram. What is haram is combination of two contracts that contradicts each other. But combination of two contracts that complete each other or support each other, that's not haram. I can make a contract with you to say buy from you an item or lease you an item, and you take part of my rent, you take my children to school every day. These are two contracts, but they are permissible because one can be under the other. One can be part of the rent. So it's under the other. Okay?
Okay.
So not every combination of two contracts makes it is haram. Oh, God said, well, this is combination, and the Prophet prevented combination of two contracts. Gosh, you can marry a woman and have another contract that she will sell you a house and make these two contracts together. Sell you a house for $1 million and also marry her. And you made them in one paper and at one time and with one witness and everything. These don't contradict each other.
Mhm.
Okay? Any question? خلاص, no more question. The time is over anyway. طيب, see you inshallah next week. And next week is in person. I will not accept it from online, except from Jehon and Sami because of this special problem. Of course, Jehon, we are looking forward to you to come back and be in person also with us. And Sami, remember, the exams can only be in person. So there's no excuse for the exams. Next week will be in person unless we have another snow. So if we have another snow like this, so we will be also online. But anyway, I put online just in case for those of you who may have a problem. And actually, we may have the recorder also. You may refer to it at any time. So those of you who did not get the online on their appropriate email that they prefer, please send me the email that you prefer to put it on the team so you can be with us on the email that you prefer. Okay?
Tamam inshallah. Ustaz, I already came back, by the way, Jay speaking. I'm in Turkey.
Oh, you are back now?
Alhamdulillah, yes. I got the evacuation train, and by yesterday I reached already Turkey. Alhamdulillah, I'm in Ankara now.
So you are now in Ankara?
Yes, alhamdulillah, finally.
MashaAllah, alhamdulillah. So next week you will be with us, inshallah.
Inshallah, I'll be next week.
Professor, one last question before we go.
Yes.
So when is the deadline for the titles for the term paper?
Is it 15? That's Tuesday, right? But
okay.
For Sami, I will excuse. Sami, I got a serious problem. I'm waiting tomorrow want to ask the IT here because I made a lot of changes in the proposal you sent me as a title, including the title. Yani I made a lot of changes and then saved it, and I don't know where it is. I lost it apparently.
The copy that I received it
from IT tomorrow. وإلا I have to repeat all the work I did. I spent more than 1 hour on it.
Allah.
And you know, my 1 hour is at least $500. Is not a cheap hour. I charge $499 per hour when I am hired per hour for any consultation. Okay, so I spend.
Inshallah, will be.
I spend on it more than 1 hour. I may have to repeat it anyway. Okay. طيب, no more questions. See you next week.
Then. Thank you. Assalamu alaikum.
Inshallah.
Assalamu alaikum.
Wa alaikum assalam.
Thank you, bro.
Yamanillah.